There's too sharp with ET and the two important news developments today. Reliance shares tumble even after posting record profits as its core business misses the expectations. And India's Q1 earnings, that shows a patchy start for the economy with the banking majors as well as Eternal delivering negative surprises. Hi, I'm Nisha Poddar. Let's dive straight into the two top stories for the day. Reliance Industries posted its highest ever quarterly profit of 30,783 crore rupees, up sharply thanks to a one-time gain of over 8,000 crore rupees from selling its Asian paid stake. And also remember, the lower tax expenses also impacted the profits. But the headline number really masked a disappointing operational performance for this big boy, which is why the investors sent the heavyweight stock down nearly 3% in a single trading session, closing at about 1,436 levels per share. So what really went wrong and what are the brokerages really saying about this? What is the issue? Well, Jefferies says that the consolidated EBITDA was 3% lower than their estimates. Now, two key segments, oil to chemicals as well as retail. They missed forecast by 5 to 8% range. On the retail side, let's talk about that because this has been the growth engine for the group. And also, Mukesh Dhirubhai Ambani has stated a few times that this will be the fastest growing segment. Well, the revenue for retail grew only 11% YOY versus the expectation of around 16%. Electronic sales, that slowed because of the early monsoon and also store expansion fell behind schedule. Now, the lone bright spot for RIL was the telecom business, Jio, which beat the expectations with a 2% EBITDA surprise. Despite the mixed quarter, well, Reliance management remains upbeat in its commentary and they have also reaffirmed their guidance to double the group's EBITDA by the year 2029, helped by the new energy investments, also telecom growth and retail recovery. Well, the brokerages remain broadly bullish with buy or overweight ratings on RIL stock, and also target price is ranging anywhere between 1,500 rupees per share to 1,767 rupees per share. Macquarie, though, has cautioned about the near-term moderation in the stock as the company really works through these operational challenges in the near term. So to sum it up, the record profit on paper, but a miss when it comes to some of the operational delivery is something that the market reacted to, but also on the anvil are some of the group company IPOs. Let's move to the broader Q1 earnings picture for our economy, and it's a mixed bag so far. Well, data from the first 186 companies that have really reported their numbers shows that the net profit growth is clocked in to the tune of about 19%. All thanks to Reliance's one-time gain coming in from Asian Paint stock sale. Now, excluding Reliance, well, the picture is grim. The slowdown is dramatic as profit grew just 7.3% and revenue by 5.7% on a year-on-year basis. Now, that's the weakest that we have seen in at least 9 quarters for India's earnings. Banking and IT sectors have also disappointed so far. For banking and finance companies, well, the net profit grew and that growth really fell to 5% as net interest margins stayed under pressure and also the credit offtake slowed for the sector. IT companies, they reported profit growth of just 4.5% also at a multi-quarter low. One standout amongst early reports was Eternal, the parent of Zomato as well as Blinkit, which posted their results today, and the consolidated revenues, they jumped 70% on a year-on-year basis as quick commerce brings in the business, surpassing food delivery. But here's the catch. Profit fell sharply down 90% on a year-on-year basis to just 25 crore rupees for Zomato, and it is really weighing on the margins when it comes to the overall business. So the investors really cheered the top line growth, sending the Eternal shares up by over 5% in the trading session. So today the markets close higher despite a drag in the heavyweight Reliance Industries. Sensex gained 443 points, Nifty added 122 points and just about clung on to the level of 25,000 levels. It is also led by strong earnings coming in from HDFC Bank as well as ICICI Bank. And HDFC Bank, remember, also announced its first ever bonus issue, lifting the sentiment. So the broader market really saw mixed action today, with Nifty Mid Cap Index rising 0.6%, while the Small Cap 100 ended flat. Ultratech Cement rose 0.5% after a strong quarter, with Anthem Biosciences really debuting in the market with a 28% higher than its issue price that it listed on. So to wrap, Reliance stumbles on operational misses despite record profits, and India's early earnings season shows uneven growth. Lots to be seen going forward. Thanks for watching Too Sharp with ET. Thank you so much.